Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. There's still a half hour of trading left in U.S. equities markets. We just finished recording the gold forecast in which we talked about the fact that gold had a tremendous spike up, dollar under tremendous pressure today. We'll look at a dollar chart in a second. But the Dow Jones Industrial Average, along with U.S. equities, have been on an absolute roller coaster ride throughout the morning. We are now in negative territory, off about 2 points. As you can see, when we started the show, we were up about 2 points, flirting with 17,000 again at 16,994, 995. As you can see, this market is trading pretty briskly as we take a look at it going into the last half hour of trading. Wouldn't be surprised to see it close to the negative, but after trading to a low of 821, you can see we've had a tremendous range on the day. Now, how does that affect our current trade in our Standard & Poor's contract? Well, Standard & Poor's currently, this vis-a-vis the E-mini, of course, is trading up about a point at 1990 and change in that area, unchanged to down a little bit. But take a look at the low, 1967 and change. Of course, we have stops below 1965. So we were fortunate in that we avoided getting stopped out. But the kind of carnage we saw in the market today is such that we definitely want to get up and take notice. Now, when we take a look at our daily chart, and this is, of course, is a daily chart in the Standard & Poor's 500, what you can see is a tremendous range on the day. And of course, this tremendous range right here is coupled with the fact that we are currently, in essence, unchanged. This range has exceeded the range that we have seen over the last 1, 2, 3, 4, 5, 6, 7 trading sessions, and really has gone into the territory of this large 300-point spike that we saw in the Dow Jones Industrial back about 1 week ago. So traders, as I said, what is most noteworthy really about this particular trading day is the size and the range between the high of the day and the low of the day, currently down about a point to a point and a half, trading at roughly 87 and a half. The other thing that's absolutely noteworthy is the fact that when we look at the 200-day moving average, and traders, as you know, that's the price point I want to see if the market can trade and close above, along with, of course, first it's got to go above this 2,000. But this is what I'll call the sweet spot, because if we can effectively trade above this particular price point, then I believe we'll at least come in, even if we don't come in to trade to the highs, we'll at least come in to go to about 2080 on the Standard & Poor's. So traders, as I said, the dollar has been under extreme pressure ever since the announcement by the ECB, and we'll actually go ahead and pull up a dollar, US dollar, euro dollar chart where we've got both of them side by side so we can compare that. But when we take a look at this chart, what I find really not so much alarming, but something we definitely need to take a notice of, is the fact that we broke through what I believe to be a pretty critical level of support at about 96.35. You can see that right here. We're absolutely trading below that point at this time. And traders, the real tell of the tape, or a visual representation of what we've seen today, is by looking at a real short-term dollar chart. This is that it's 30 minutes in terms of the interval of each candle. We can see that they're well off of these particular lows, and they came in at around 96. We're at about 96.24. So over the last hour of trading, we've definitely had, whether it be short covering or initial buying, but we've definitely seen this market begin to find some support in this particular area. And this is that chart that I spoke of course. This chart here, let's go ahead and kind of enlarge the candles, but this chart here has the euro on the bottom, has the dollar on the top. Let's see if the market can actually trade. We're now at about 21, 22, 96.21, 96.22. If we can get an effective close and find some support on this dollar right at this particular price point, we are just a couple of ticks below it. At the same time, when we look at this tremendous spike in the euro, you can also see that this is a particular level that is a Fibonacci-based resistance level, and we're not all that far away, but we are currently trading much higher on the day, almost at 112 in terms of the euro dollar itself. So traders, as I said, no doubt we have witnessed a roller coaster in the marketplace itself. Our stops remained intact, and that's something I'm very, very happy about. Maintain your current long position. Market's trading roughly at 1985. We're in at 79. Maintain your current stop below 65. We will talk to you tomorrow for another Trending Markets, more importantly, for the weekend wrap-up and review of this most interesting week. Talk to you then. Bye-bye.